Hi everybody, my name is Paul Weathers and I want to talk to you about asset allocation. A good example of asset allocation or diversification is traffic. If you've ever been stuck in traffic, you've probably had the experience of your lane creeping along, going too slowly, so you switch lanes and the lane you were in speeds up and the lane you change to slows down. That's a good way to think about asset allocation. Different sectors in the economy perform differently from year to year. Sometimes international stocks are performing. Sometimes it's U.S. companies that do well. This shows you which asset class was best in a given year. Emerging markets were the best in 2012 and the worst in 2013. So changing lanes and chasing what worked well recently is not necessarily a good way to help build your portfolio. You should consider having some large companies, some small, some domestic, and some international. If you do this, you'll likely have lower highs, but you should also have higher lows and help smooth out the ride for you as an investor. Oftentimes a prospective client will show me their account statements from their 401k or an IRA at another firm, and it's apparent that they haven't had much assistance diversifying their portfolio. They may have different funds or different stocks, but if you look closely, the investments are all in similar types of companies doing similar types of things. Sometimes people have accounts scattered all over the place, but if you look at their specific investments, they're not diversified at all. This will give you a visual of what I'm talking about. This account has way too much in one thing, large cap investments in this example. More than half of this investor's money is in large companies. Now that's great when large cap is working well, but it's bad to have all your eggs in that one basket when that asset class is not doing well and you're completely overexposed. Diversifying doesn't guarantee against loss, but it can blunt the impact of a downturn. Now, there may be some of you watching who aren't in traffic at all. You're on the side of the road going nowhere because a lot of your money is in cash. As recently as 2007, the national money market yield was 5%. If you had $1 million sitting in cash, you could generate $50,000 in income. Do you know how much money you would need in cash today to generate $50,000 in income? More than $100 million. So you don't need to go from the side of the road to the fast lane, but why not at least move into the slow lane to get off the side of the road? I hope that is helpful to you. If I can be doing anything for you, let me know. And thanks so much for watching.